Hi traders, Nick Shaheen here, Benzinga, also MarketFi.com, create income with option spreads. Recapping the week ending April 25. Did not end on a good note, obviously. Market sold off pretty hard today. But this should not have come to a bigger surprise to anybody because it was Friday. We had headline news. In fact, I'll read you my closing note yesterday, word for word. Caution is still warranted, especially that traders are likely to sell going into the weekend with headlines looming. By headlines, I mean geopolitical headlines. And I continue here. We need any sign of de-escalation. Otherwise, tomorrow might be a tough day. That was my ending notes last night. Indeed, it was a tough day today. I wish I was wrong. So let's run through the day before I move on to the key points I wanted to make. First of all, obviously the S&P held up a lot better than the NASDAQ and the small caps. Now, if I zoom out and don't know anything of what happened this week, I would say this was a normal sell-off day. By normal, I mean the Nasdaq led down. I'm sorry, the small caps led down. The Nasdaq obviously underperformed the S&P a little more than I usually would expect it, but we know why, right? The Momos got hammered hard. A few big names got hammered really hard, so it's kind of skewed. And the VIX was up big, up 5%, although it was up, I think it was 9 or 10% at one point. So, but looking at the general market, when you have the broader indices down and the small caps down by a lot more, and then the VIX up, so that's a normal market, a down day in the market. Now, intraday, a lot has happened. First big surprise, pleasant one, it is Apple right here. Apple held up after a big gap yesterday, obviously everybody knows, and it toyed with some key levels, and then on cue, I sent out a tweet saying that it's looking to break out, and boom, right on cue, it broke out, and then tried to sell off, and it looked like it was also going after this level again. I said it's looking to break out. I said it here, but I didn't do it here, but I did it a few minutes later. And it closed strong from higher lows. It was trying to get out all day. This was an easy sell for somebody that wants to book profit. So some money going into the piggy bank, as I call Apple. It will hold up better in the downside than most because it is a good company. People poo-poo it, but it's a good company. So having said that, sorry about that, forgot to turn off my cell phone, so I got cut off. So anyway, going back to here, I forgot what I was saying last, but I'll pick up from what I wanted to say. So the Apple, they had reason to sell it, but they didn't sell it, so that was a good note. It holds up better in down on tough days, just because it's an awesome company. A lot of people hate it and make fun of it. They need a flying car out of it, and but when times are tough, guess what? They run to it. So today it held hard. Held well, I should say. What didn't hold well was the 10-year, and this is the 10-year right here, and it started to downtrend, and this coincides. If anybody has any doubt as to we're not trading with the rates or not, whether we're trading with the rates or not, we are. If you look at this right here, and if you follow across, I'm going to move over to the ES, same spot right here. So low of the day, low of the day. And I'm going to move to the other part of the rates, which are the bonds, the 20 plus. So the TLT would represent that, is the high of the day. That coincides with this point right here and that point right here. So we've got a fight going on between the TLT and also the yen, but not so much today. So we'll stick to the TLT versus the 10-year and the markets. They're inversely related, TLT versus the other two. So, but something today happened right about the last couple of hours. I think I noted it with these arrows or not. We had tick simultaneous red ticks in the same direction. Yeah, you can see here. You can see the markets going down, and at the same time, the TLT went down. And that happened sporadically throughout the day. So this confirms to me that most of the sell-off today is not fundamentally driven, meaning it is something outside, and that thing is the fear of headlines. So as we got to the close, people didn't care, TLT, TNX, it doesn't matter. They wanted to sell out or buy protection and go into the weekend relatively flat or not so exposed to the long, because anything can happen over the weekend. So the thought is that nothing changed fundamentally today or yesterday. It's just that now we have the headlines that we expected from the last couple of weeks. I've been saying that those headlines have not gone away. They're just quiet, and they're going to get more busy as the May elections come up. I think it's early in May. So that was the snapshot of the day. Usually the yen also has something to say about it, but somewhere around here, that's the end right here. Somewhere around here, it broke down. So yes, it closed green, but it was weak at the end of the day. The TLT ran up, but then slid down throughout the end of the day. Otherwise, we would have been a much uglier picture today. The ugly picture was in the Momo. There's no doubt about it. So what I say as to what to do here, it's doing nothing sometimes is the smartest thing. But if I am long, I have to consider the possibility. So coming into Monday, we have three scenarios, at least I do. Number one is no news, nothing, no developments, nothing bad, nothing good. So we may have a relief pop that nothing happened. And that I will probably try to short somehow, either buying puts in the S&P, something that doesn't create extra risk. So a relief pop if nothing happens. We're all glad that Russia did not invade Ukraine. Second thing is that we get a major negative development over the weekend. So we will come into more selling on Monday. I'm hoping for this not to happen. In fact, I think there's so much on the line that the global powers, I don't think they're stupid enough to actually do something about it, physical. So that's scenario number two. The third scenario, where we would have a positive news. And by positive news, I don't mean like they resolved the situation. Positive news, I mean nothing happened, but someone is saying something nice about something. So by that, I mean somebody's reaching out for some talks. Somebody's saying, let's sit down and talk. That's a sign of de-escalation, as opposed to what happened the last couple of days with Kerry coming out saying, yeah, you better do this or else. That kind of talk scares everybody. And so if we get this positive news or development, I should say, then Monday the bounce will be a little better than a relief pop, and it may actually last into a Super Tuesday, which we all know we're not allowed to sell on Tuesdays. So as long as we can survive Mondays, I guess we can breathe a sigh of relief. So that's the what might happen. So having said that, the selling today was all geopolitically driven headlines, not fundamentally changed, but still I'm not going to do anything drastic. So given it's not a fundamental change today, I'm going to sit on my hands and not be tempted to try and catch these knives, because I am a slave to the headlines, and headlines can break. They're killers of the best of trades. You can come up with the best trade and you get a headline, boom, you're blown out one way or another. They blow out on the top and the bottom. So doing nothing sometimes is smart. Now doing nothing when you have risk is not smart. You got to hedge your risk. I did that today. I have a few long positions. I bought some puts, and I chose to buy puts in some names that have been damaged. Or you can buy some TLT calls, for example, or call spreads. Give yourself some time to be right if you don't want to waste your money. Kind of like renting insurance. You can sell it on Monday, but at least survive the weekend, you know. So you can also maybe if you know what you're doing, you can sell some June risk or far out risk, way out of the money, to finance some of these rentals of insurance. What do I mean? Let's say I need to buy some puts. Why not sell some June risk that's in the low 1700 on the SPX, for example? That gives us about 8%, 10% move down from here and still be okay, and time. So it won't, even if we sell down, the buildup and the premium will not be as drastic as, say, something that I sell to next week around the 1850, so, or 1820. So if I'm dying to sell next week, I definitely wouldn't sell closer than the 20s. And if I'm not dying, then I'll sit on my hands or buy some protection. And sometimes for someone who knows what they're doing, they are comfortable maybe selling some outside risk, way out of the money, way out in time, just to bring in some cash in order to pay for the rental of the puts. So this is, doubling down almost, but in a relatively safe manner. Now there's no guarantee we won't go down 20%, obviously, on breakout of war, but it's not likely, and you can quickly react to it with much less damage than, say, something that you sell for next week. So it's very tempting to catch these falling knives, and boy, do we have so many of them. And some of them make sense. Still, headlines don't listen to sense. They will blow you out. So again, doing nothing is not that stupid. So today's video might be a little shorter than other videos because I don't want to say anything to get anybody in any kind of trouble. So now I want to talk global. Everybody's talking about some head and shoulders on the NASDAQ. So let's look at the NDX. So everybody's expecting it. So now this is the 2-year weekly on the NASDAQ. And I'm looking at it, okay, it had a nice up channel. The channel broke down, but now we defended a couple of times on the downside. We bounced on that level. So now it's critical that we hold this level. This is weekly, remember. Every candle is a week. So now we're trying to one can say, okay, we have falling peaks here. We're knocking on floorboard from lower highs, which can be dangerous. Eventually the bulls will get tired and the board will break and will slide right down. But one can also argue that we had 3 candles in a row here where since the bounce, they tried it again, they didn't succeed, and this time, even though it was an ugly candle, we're still above that level and knocking maybe at breaking that line right there. If we can break that on the upside, that could be good. So again, it's a coin toss almost at this point, because everything is going the bear's way with the headlines and the sentiment, and Amazon misses and blah blah blah, and Twitter and Zillow, but we're still yet right there. And talk about we're still right there. Here's another one that shows we're still right there at the most. This is the SPX, right? The S&P. We have a beautiful trend. Again, this is a 2-year trend. It's not like I pulled up a couple of weeks and I drew a line. Now, this is not a scientific line, but I just try to pick up the most significant candles at their bottoms, and then I can see that, okay, the trend is tightening. We're trying to knock, like I said, we're knocking on a floorboard earlier in the other example. Here we're knocking on a roof from higher lows. So eventually the bears will get tired, and the theory is that they get tired of defending that level as far as resistance, and then bulls have a chance at poking through it. So now we come up to a decision. Again, we've had 3 candles where the world is ending, yet it still looks good on paper. If somebody comes from, an alien comes down here, goes, okay, so what's going on here? It looks like the bulls are kind of still trying to break out. Ignore everything else. So I'm not saying everything is rosy. I'm just saying it's almost a toss-up. And when things are going the bear's way for a long time and the game is still close, then the bulls have a good chance of winning that game. I'm not saying we're going to run through 1900 and to above 1950, 60. As a matter of fact, I will be comfortable selling. Earlier I told you to sell some out of the money June risk. Why not make it an iron condor? So you sell a credit put spread. I sell a credit put spread, say at 1700 ish, maybe 1720, and then do the opposite and sell a credit call spread in the high 19s, wherever I can get decent premium. I can collect probably about between 70 cents and $1 in premium, where the max risk is the spread is $5 wide, so your max risk is the $5 minus whatever premium you collect total, because you can only lose on one side of that equation, right? Margin requirement is only $5 because of the fact that you can only lose one side of the equation if they're in equal size and time. So that would be a good way of bringing in some income in order to do whatever you want to do meanwhile, without taking much risk. Undue risk, I should say, open-ended risk. So the SPX doesn't look that bad that way. Now, what looks bad is if you run through some of these scary names, and let's just start with the biggest one that was hogging the news today, which was Amazon. This is a 1 year daily, and Amazon, I've been saying, I've drawn this blue here from a while. You've probably seen it before in my other videos, and I said this level, it was first this box, that was my area of contention because it was a well-contested area, and I said, look, it poked out, and then nope, it broke down, and then it broke down completely out of it. So I said, okay, now we have that blue parallel downward channel, and it looks like we're going to head towards up here. Guess what? We didn't. So now we're back down at the bottom of it. So that doesn't look good, right? Because in theory, this is a head and shoulder-ish pattern. In theory, in spirit, it tried, it failed. It tried harder, it failed. It tried and it failed miserably. So now it's going to likely fail. So I said, also there's this bigger macro kind of head and shoulders in spirit again, 1, 2, and 3, and this will bring us down to about here. So that was my expectations. I said, so know your levels, and I have not tried to catch that knife, but that's what happened today. And if I were a gambler, if I wanted to short the market, I would short it via puts. I just buy puts because that's not looking good. Today's drubbing was hideous. It was down 10% at one point for sure. Baidu, different story. Reported they loved it. It couldn't hold its highs, but they turned it red today, and then it fought back and closed green. So that was a really good sign. IBM, I've been wanting to short it. I keep forgetting, and nobody's reminding me. Come on, people, somebody remind me. But this is an ugly chart, and I wanted to short it, so I missed an opportunity there. LinkedIn, boy, I'm glad I didn't try to catch that knife, but that was an ugly picture. They all look like the NASDAQ, they've come back, but this one looks pretty ugly. Zillow, I think, is probably the ugliest of them. I don't know the company fundamentals, but that is a pretty ugly candle. Other companies, it doesn't have to be high tech. Lulu, very important level. I have not re-entered Lulu in a while. I used to buy every dip. Not anymore. I need some more from them. These are just hideously scary levels. Boy, heartbreakers are Visa and MasterCard. Yikes. Visa, look back to that level that I mentioned before. And again, like the NASDAQ, let's go to 1 year so we get a little closer view at it. So can't touch this, as Hammer would say. Let's see if we can go MasterCard. Now, MasterCard has, there's a good lotto play on MasterCard maybe into earnings, so maybe they'll surprise, but look at that. There's a trend line here coming down and coming up against nothing really. It's just, I saw 3 falling peaks here, and I thought it would come to this level. It came close and bounced with this and then it bounced up. But today's drubbing was, a sit back and wait and see. So I could run through all of these, but the story is the same. The most impressive move today, by impressive I mean not impressive, the opposite of impressive is this. This is a $1,200 stock that was down 5%. That is significant. That is like one of the biggest scandals it's had in a while. There's one here and there's this one. Volume is pretty high too, not as high as last time, but it reports earnings soon. So again, this would make for an awesome lotto ticket. Lotto ticket, I mean buy, puts, calls, whatever you want, but just make it a directional play and make it a finite cost of the play and nothing more. And sit back. Maybe you get lucky. It's a coin flip. It's a lottery ticket. So anyway, I'm not going to run through all these names. They're all ugly, most of them. VMware. I think Caterpillar was green today. I'm not sure. I thought I heard somebody say that. I don't follow it day to day, but nope, it wasn't. So anyway, that was a shortable stock, I thought, yesterday, and I thought the move up yesterday was like, oh, you guys are crazy. So now it's even more shortable. As a matter of fact, I'm going to do that on Monday, maybe buy some puts in Caterpillar. So anyway, the overall picture doesn't look as grim as it is, but the news flow has been grim. So as far as news, I mean headlines and all of that. Everybody's expecting it. Everybody wants to pull back. Yet when the pullback comes, nobody steps in and buys. So, put up or shut up, I say to these guys. Anyway, sit on your hands. Preserve your capital. There'll be time to enter. Don't chase, especially Apple. Unless they deliver something, I wouldn't chase it. It popped, that's great. Actually, we should look at it. But now it's at a very significant level. But that I don't mean it's going to break down, but this is the level where from which it broke down before. So it's a hotly contested level. See that bright red one? Okay, it came to it before, it failed, and then it ultimately failed to the lows. I think Apple is an awesome company. I don't like their products. For me, they're not for me. They're awesome products, not for me. But stock wise, I mean, if I can't risk money on Apple, I should just pack it up and go home. And how I do it, I usually sell credit put spreads, and I close my last winning one, and now I'm just sitting on my hands waiting for an entry point. I don't want to do it before it splits because that just complicates the spreads. If I do it, I'll go in and out within a couple of days. So that's the story, folks. I'll hook up with you next week. Meanwhile, you can follow me on Twitter or StockTwits, and my handle is at RacerNick. That's RACERNIC. Okay, at RacerNick. I'll talk to you soon. Have a great weekend.